How to avoid the next real estate downturn. Frans and Caroline Swaff, management consultants in the Netherlands, have been enamored of South Florida since they were graduate students at the University of Miami in the 1990s. When the housing crisis hit in 2007, they thought their time to buy had come. They bought a condo. The Swaffs began investing in other properties. In 2011, that was a signal to the couple that the market was slowing and that it was time to put their investment gains elsewhere. Prices in the real estate investments, whether residential or commercial, have long been associated with wealth creation in the United States. The 2000s, in a recession, though, the value of real estate, a mix of the home's or building's value and its location, becomes harder to discern. An investment real estate has a good track record, said Peter Heilbron, Senior Investment Officer at Northern Trust. But we know that Mr. Heilbron equated housing losses in 2007 to what happened to stocks after the Great Depression. It's not that this is the fifth and final installment in a series looking at how people manage passion assets, those that produce tremendous investment gains and carry social cachet and provide personal enjoyment. But when the real estate traditionally has two prongs: residential properties that owners live in or rent out, and commercial real estate like apartment buildings, office space, and shopping centers that are bought and sold based on the revenue they generate. For residential owners, the risks can be greater going into a recession. The value of their home, where it tends to work out better than not, is at the top tier, said Karen Harding, leader of the private wealth practice group at NEPC, a wealth advisor. But owners of several high-end property markets are softening, which presents a buying opportunity or a selling crisis. New York is still, but parts of the Manhattan market have cooled, said Noble Black, a broker at Douglas Elliman. The era of Allison Turk, a broker with Hume Realty in Miami who advised the Swaffs, said that some neighborhoods, like Coconut Grove, were flourishing, but that buyers had to be more selective and sellers more pragmatic. For commercial properties, investors should focus on price and long-term returns, but there are such enormous tax advantages for real estate that losing money may seem hard to do. The oldest tax break is the 1031 exchange, named for its section in the Internal Revenue Code. It is also known, since then, these exchanges have come to include all manner of real estate transactions in which enormous taxable gains are rolled into another property of equal or greater value. In theory, this break was pared back in last year's tax overhaul to exclude collectibles like but interest in it, but these transactions carry risk, particularly in a slow market. During the last recession, it's always a good idea to know where you're going before you leave where you are, he said. A new tax incentive for real estate is which allows people with any sort of capital gains, not just from real estate, to invest in real estate and businesses in designated communities. But to realize that residential or commercial properties have carrying costs, like debt on the property and associated taxes, which are known up front. But there are also, with any investment property, some or all of these expenses can be tax deductible. State and local this strategy has helped some affluent owners in soft markets. Chris Sander, if it's a large property, the ongoing costs are significant, he said. Renting may be historically, rental revenue has remained stable in downturns, although a luxury home is more difficult to rent than a standard two-bedroom apartment. The rent on a $1 million house isn't 10 times the rent on a $100,000 house, said Gary Beasley, chief executive and founder of Roofstock, a marketplace to buy and sell investment properties. Your yield tends still, what matters are the price you paid and the rental income you're getting above the costs of the mortgage and maintenance. Real estate also needs to be considered against other assets in a portfolio to ensure there is sufficient cash to withstand a downturn. People collect passion assets and invest in them episodically, but they do not think about them in total, Mr. Zander said. You really need to As for the Swaffs, they are leaving the door open to investing in South Florida real estate again. It could be that we're back in Miami with another president and after a recession that will make the market more interesting, Mr. Swaff said. If you have the patience.
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park pot.